Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. As always, we start with the light crude oil futures market, which over the past week was actually bullish. We closed higher than we opened, and the reason for that is the price was basically able to bounce off the 60 round number right around here. We had talked and anticipated about a potential bounce off of this area in our previous week's video. We had talked about this short-term wedge pattern, how this could turn into support for price as it was basically falling down. For people who follow and use trend lines for their technical analysis, there's also this support trend line, sharp rising support trend line that we can talk about. We had the first touch over here, the second touch over here, and we're basically bouncing off of the third touch of the support trend line. If we zoom out the chart, we can actually see that this consolidation box back from April last year is also coming into play. In the previous videos, we've been talking about this consolidation of box as well. In fact, we talked about it the most when price had basically broken out of this to the upside around here, and we had talked about how when price pulls back to it, and if it does, we could expect it to hold as support at the top of this box or around the mid-range level of this box, which in this case actually even lines up with the 60 round number. So that's kind of where price is now holding as support. It's been using this short-term consolidation and this wedge pattern formation over here, all this consolidation and hold up that we had in the past around here, the 60 round number, and possibly the support trend line that we drew a little bit earlier. So plenty of reasons to believe why price could be bouncing off of this area. Once again, for the more longer term, we've been talking about higher price levels for this market, more closer towards some significant, extremely long-term support and resistance levels. We've been talking about all these lows around here, how price could eventually be headed here. And that still seems way far off into the distance. It's well above the 75 round number, more closer towards the 80 round number, but we believe that price may actually eventually be headed that way. A lot will obviously depend on how price basically behaves around the 60 round number. If this level right around here continues to hold as support and allow price to trickle back up, we could see a test of this more recent swing high around here, and if you're able to break it, maybe pull back to it, hold the support, and just continue our way up. Our next major target for this market will definitely be the 75 and the 80 round numbers, which would line up more closely with these extremely long-term former support levels, which could then be expected to turn into resistance. A lot of that really just remains to be seen. As far as the following week is concerned, we just expect price to continue going further up as long as the 60 round number and all the levels that we just highlighted continue to hold as support for this market. Okay, so the next market we're going to be looking at here is the S&P 500 E-mini futures market, which was again a very, very interesting market to follow last week. We actually saw this market pulling right back, which may actually be a surprise for a few traders who had seen this market crashing down here in the 2 to 3 weeks following into last week. We had actually anticipated this move to the downside after seeing price basically getting steeper and steeper in this uptrend. We talked about how this such strong bullish momentum is usually not sustainable, and is usually a sign of price trying to head to a particular price level from where we're going to see a major bounce. And that's what we saw here. Interestingly, we had noticed last week this wick to the downside on this candlestick over here, and we had talked about how we're already seeing some buying come into the market. We had also indicated that the same phenomena that saw us create this sharp move down, which is basically following a very sharp move up, it could be the same phenomena that could help us actually resume this uptrend back up again, because as you can see, the buying here coming to the market is actually trying to tip over this extremely sharp move down. So just as a sharp move up is usually not sustainable, a sharp move down will also usually not be sustainable for too long, and is again an indication that the market is trying to get to a price level from where it can potentially, more times than not, just bounce off of. And that's exactly what we're seeing here. We talked about how this candlestick low here is going to be very, very important in terms of the fact that if price was not able to push past it and sustain that move authoritatively, that could be a sign that price may actually just trickle right back up. And you can see that this week price really wasn't able to make it past these two swing lows, these two bar lows here at all, and instead we're now just trickling right back up. Again, not a surprise at all given all this extremely strong selling that was coming into the market over here. For the following week, we would ideally expect price to continue pushing a little bit higher, probably more closer to this more recent swing high that we created a few weeks ago. That would probably be a very strong indication of the fact that we may actually just continue with this uptrend that we've seen for this market for a very long time. Alternatively, just looking at the volatility and the choppy movement that we're now seeing and witnessing in this market, we could actually even continue to chop around as price basically tries to find a more definitive direction. We're now seeing sort of a ceiling marked by this more recent swing high and the floor marked by these two instances of bounces off of the 2500-ish area around here. And this is, as you can see, this is a very, very wide range for price to be chopping around in if it does decide to do so. So as far as short-term direction for this market is concerned, really all bets are off from us. It's just a volatile market to be in right now. And although, like we said, ideally we would expect price to just continue higher, but given these volatile conditions, really nothing much can be said about this market in a certain and definitive way. Okay, so the next market we're going to be talking about here is the gold futures market, which over the past week is starting to show signs of the development of a very interesting pattern around here. So over the past week we talked about this bounce off of the 1350 level, which lines up with this former recent swing high and sort of the mid-range of this former consolidation box. We had talked about this fake breakout where we had a bullish candlestick close above the level, and the next candlestick wasn't really able to sustain that bullish momentum at all, and we popped right back down. We had a pullback as price held as resistance again at this level, confirmed it as resistance, and then we were continuing to trickle further down. We talked about how price was going to find major trouble at this rather thick looking support and resistance zone around here. We have a lot of activity here in the past as well. We had a bounce around here. We had several lows from the consolidation in the past that we've had around here. We had this major bounce coming off of it, and then obviously all these bounces within this thick zone, which is sort of centered around the 1300 round number. So if we stretch the 1300 round number, it lines up literally in the middle of this zone, and that was sort of the area where we were expecting price to make it to before it bounced or showed signs of bouncing. Instead, we just bounced from right at the top of the support and resistance level. It also even lines up with this minor bounce that we've had in the past when we were strongly uptrending off of the same level. And so essentially now what we're seeing is price basically retesting these highs around here. All that said and done, we're noticing a very interesting pattern for this market over here. So if you notice, we had a consolidation phase around here. We had several bar highs and several swing highs around here. Then we sort of pulled back to it, and we posted a swing high around here. And in more recent times, we're starting to come back to this level more frequently. So if we draw this pattern around here, so the first time price bounced off of this 1350-ish area, it was a very strong bounce. The second time that we bounced off of this area, we'll sort of exclude this because it didn't quite make it to the level. So the second time price made it to this level, again we bounced decently enough. We went all the way till here. Then for the third time, we're testing this level again. This time the bounce has been very minor, and now we're testing it for the fourth time, the same level. So if you look at this, we're essentially developing a more longer term sort of a wedge pattern here where the top is kind of sealed off with the 1350 level, and we're witnessing higher lows here that are indicating that price may be gearing up to eventually break to the upside. And that is something that we had anticipated earlier as well, right around the time that we had the fake breakout here. We were anticipating that if price was able to sustain a little bit of bullish momentum around here and allow price to venture maybe above this this high around here, which would mark the clearance of all of the more recent swing highs and bar highs that are creating the resistance in the area, then we could really see price continue its way up. And even though that turned out to be a fake breakout and price pulled right back down, now that we're seeing the retest of this level again in a very short period of time, it is sort of connecting to the possibility that we could actually be gearing up for that move to the upside. So going forward, if we are able to sustain the bullish momentum and we're able to basically go past this resistance area that we're seeing around in this area, then we could well see price to spring out of this tightening wedge pattern and just create a sharper, more sustained move to the upside. Okay, so the next market we're going to be looking at here is the Euro futures market, which for the most part this past week was bullish, although on Friday we saw some bearish activity come into the market as price found resistance at the 1.25 round number, which has been playing its role in the recent past for this market. We initially had seen this pin bar come off the 1.25 level as well, and now we're seeing resistance once again coming in at this level. But the more broader picture continues to favor a more upward movement for this market. So essentially this past week we bounced off this extremely steep rising trend line for this market. We've had this initial bounce around here. This was the second bounce, and the market kind of bounced off of the third touch off this support trend line. However, we were anticipating a more deeper move down, more towards the 1.21 level, where a bounce would have been a lot more definitive and purposeful in terms of technical analysis dynamics. So if we zoom out the chart, you should be able to see exactly what we mean by that. So the 1.21 level here basically lines up at a very, very important and significant support and resistance level. We had a very important swing low being posted here in the past. We had some resistance coming off of the level in more recent times, and again some resistance around here as well. So a move down to this level and a bounce from this level would have made us more confident in the bullish momentum that we would have seen at that point. Although it's still not bad to see bulls really take over the market once again, although we're still not past the important 1.25 level. And of course we'll need to do that. We'll need to push past the 1.25 level, probably use it as support, pull back to it, test it as support, and just continue a little bit higher, closer towards the more longer term levels around the 1.28 and 1.29 levels. But for now, this is still just good activity in terms of this more longer term uptrend that we're seeing develop in this market over the past few months. So going forward in the following week, if 1.25 continues to hold as resistance, it could be bad. It could be a bad sign for the buyers here. We've already talked about this extremely steep trend line, support trend line. If we're able to actually trickle right back down, pull back to the support trend line, test it as resistance, and continue down, we could actually then be headed to the 1.21 level, which would be the next extremely major trouble area for price, and we would definitely expect at least some kind of support to come in at that point. On the flip side, if we see this bullish momentum actually taking us past the 1.25 level, then we could have a scenario like this play out where price could then use the 1.25 level as potential support and just continue to move higher. Our more longer term targets for this market continue to be around these former major swing lows and support areas around here. They line up with the 1.275 to 1.28 level, and that's where we believe price may be headed in the long term. And with the recent activity that we're seeing, it seems that that level is starting to get closer. Okay, so finally we look at the 10-year Treasury note futures market, which over the past week showed more signs of recovering from the shock that we had seen post in this market a couple of weeks ago, when the sharp sell-off in the S&P 500 index led a lot of investors to turn to more safe haven investment instruments, including the 10-year Treasury note futures market. So over the past week, you can see we were able to print a bearish candlestick pattern that closed well below the lows here, where we initially saw the buying come into the market a couple of weeks ago, the sharp spike up. So we were able to close below this level, and on Friday we actually retested this area and we didn't see an authoritative close back above the level. This could be an early indication that we have the bearish momentum that we need to allow prices to continue to move down, more in line with the broader longer term story that we've been talking about for this market over the past. So we talked about how price had broken out of this extremely important long-term support zone. We saw price making an initial pullback to this level, holding as resistance and then continuing on. Interestingly, a couple of weeks ago when we actually saw price sort of shoot sharply back up, we held as resistance literally to the tick at that same level, and now we're posting signs of possibly more bearish activity to come for this market. We've also been talking for this market about a former area around current price levels that could actually prove to provide some kind of trouble for price as it moves down, and we even use that as a reasoning to support, as a technical reasoning to support the bounce that we had on this market a couple of weeks ago. So what we're talking about here is this former consolidation box around this area. And as always, we talk a lot about the mid-range of these consolidation boxes, the top range of these consolidation boxes, and the bottom range of these consolidation boxes. Our longer-term target for this market continues to be these lows around here for this consolidation phase, former consolidation phase, as a good, legitimate long-term target for price if it continues to post more bearish activity. And just looking by the developments that we're seeing here, we might actually well see price eventually trickle all the way back down to the 118 level. Although once again, just looking at how important and how significant this consolidation box has been in the past, taking cues from the bounce that we were able to see eventually as price broke to the upside from this consolidation box, it does hold a lot of importance in terms of potentially yielding its role as support and resistance for price. So as price continues to push down, we will continue to watch as it moves into this important consolidation box, particularly the mid-range of the consolidation box that would line up roughly around here.